Imagine turning $100 into $1,000 without ever leaving your home. That's the power of the stock market, if you know how it works. But if you don't, you could lose it all. In this video, we'll show you how the stock market really works, simply, clearly, and safely. A stock represents ownership in a company. One share equals one tiny piece of that company's future. The stock market is where buyers and sellers trade those shares. It's like a giant auction that never sleeps. You need a brokerage account. Apps like Robinhood, Fidelity, or Charles Schwab let you trade from your phone. Companies sell stock to raise money for growth, debt payments, or new products. You invest. They expand. Stocks are traded on exchanges like the New York Stock Exchange or NASDAQ. They connect investors globally. Supply and demand. Positive news, prices rise. Bad earnings, stocks drop. A bull market means rising prices. Investors are confident. Growth is everywhere. A bear market means falling prices. Fear takes over. People sell. Some companies pay you part of their profit as a dividend. Hold shares. Get paid. Simple. Growth stocks grow fast, but may not pay dividends. Value stocks are steady and often pay. ETFs are bundles of stocks. They give you diversification without buying each stock individually. Mutual funds are similar to ETFs, but actively managed. You pay a manager to choose for you. You earn money in two ways: price increases and dividends. Buy low, sell high, or hold and collect. Stocks can crash. Companies can fail. No investment is guaranteed. Day trading is risky. Long-term investing builds real wealth. Chasing hype, panic selling, and overtrading. Avoid the noise. Stick to your plan. Look at revenue, profits, debt, and future potential. Don't just follow influencers. Follow data. Invest a little each month. It's called dollar cost averaging. It beats trying to time the market. Start with what you can afford. Learn as you go. The earlier you begin, the bigger your future can grow.